The business of the day has to go ahead, and top of that business of the day is the question of Enoch Godongwana giving us a sense of whether or not we will continue on the path of fiscal consolidation with the South Africa Economic Reconstruction and Recovery Program as our blueprint.
Yes, good afternoon to you. Listen, you're quite right. You said it quite aptly in your preamble there. The country is going through blackouts. People are still having the impact, severe and desperate impact of COVID-19. And we still suffer from this reality of 12 million working-age, jobless South Africans who simply cannot find work. And if you don't attend to that, if this document doesn't in some way or the other attend to that desperation, it really loses relevance. I want to bring in political and economic commentator here, Daniel Silk. I mean, it's exactly that, Daniel, isn't it? Because we've got a range of very intricate numbers here this afternoon that the Finance Minister Enoch Godongwana will present. It's a thick book. You've got to read through it to actually understand the concepts. But if it doesn't make the livelihoods of people better, create jobs, and have a projection that seems promising for this country, it kind of loses relevance, doesn't it?
Yeah, I agree, Devon. I mean, you've got one story happening inside the chamber, and you've really got a lived reality for the millions of South Africans outside. I mean, you've got 42% extended unemployment in this country, as you indicated. The real issue today has to be about a narrative of change, a narrative of policy change. As a new Minister of Finance, he's going to show there's some continuity between the previous Minister of Finance, I would argue, but he has to really go beyond that. He has to at least hint at the development of policy that will result in real growth, because after all, if you're going to pay for all of the line items that are racking up in their billions here in South Africa, you need to have policies that address that. We haven't seen the ANC be able to articulate a clear economic policy framework at all, and I would certainly argue that without that, these are just numbers, and these numbers can get better, but they can also get substantially worse.
We are told that the numbers might look good in the short term, and simply because we have this wave of revenue coming from the mining companies who did well. So that might be one beauty spot in the budget this afternoon. But then you have those spending pressures, those demands, Daniel Silk, coming first of all from the unions. I mean, if you're going to cut expenditure and make your purse a little bit more workable to meet your social obligations, you'll have to cut expenditure. They've already identified wages a couple of years ago as the target, one of the targets. The unions are having none of it. And again, you can see how politics kind of actually has its arm in the finances of this country, because it depends so much on what happens with the other.
Yeah, I mean, politics has the end say when it comes to all of what we're going to see this afternoon. Ultimately, what can the ANC network within its own alliance in terms of austerity measures, and they are austerity measures, despite the fact that the previous finance minister didn't want to call them that. The wage labour bill that we've seen in an attempt to reduce over the last couple of years, that could come under some pressure. Because after all, the unions are a key component of the alliance, firstly. And secondly, for President Ramaphosa, he needs the backing of the unions to continue in power through the ANC's National General Council meeting next year. So there are political pressures building up within the ANC to balance. It's not just the Minister of Finance who has to balance this tightrope between what to spend on and what to save on. That balancing act is within the ANC. And unless there's broad-based political buy-in from all of the alliance partners within the ANC, you'll get a messy, incremental approach to budget making. You'll get an acknowledgement that there's a revenue windfall thanks to the commodity super cycle. But at the same time, we face barely 1 or up to 2% GDP growth projected for the next 2, 3, 4 years. There is no way that we can counter new job seekers on the market every year with a growth rate under 2% per annum. And unless you do something about that through prudent and relatively market-friendly policies going forward, which requires an ideological shift for the ANC, you languish in this no man's land of policy making.
Daniel Silk, I'm told we're running out of time, but as I leave you, I want to extend that point to the other big issue that's on the cards here, the issue of the extension of a social distress grant after March 2022. Are we going to see something announced today? Many of the analysts are saying that no, it's not really the place for actually making such a huge policy shift. Remember that grant comes to an end after March, and you're going to need money, not just a tax windfall, to keep that permanent. It'll be interesting to see what he says on this grant later this afternoon to us.
Without a doubt, Devan Murugan, what President Ramaphosa already said about the consultations around the possibility of the introduction of a basic income grant for adult South Africans. That's eNCA's business editor, Devan Murugan, live for us in Parliament.